What's going on, everyone? What's up? What's up? Welcome everyone to the live. Welcome everyone to the recording. Right. In the meantime, while everyone joins up, I'm gonna go ahead and put the stream out to everyone, which for some reason is not showing. I don't know why it's not showing up here. Let me see. Let me see. In the meantime, while I'll start all of this up. There you go. Okay. There we go. Okay, okay. Now it's showing up. Perfect. All right. So here, what's up, everyone watching? Let me put this out. Okay, cool. I don't know what that was. Okay, let me shut up the call in the meantime as well. Let me see. Events. Start. There we go. All right, there we go. Yo, wait, hold on. Matter of fact, hold on. Yo, what's up, everyone? Okay, now we're starting. Okay. What's up, everyone? What's going on? What's up? Okay. In the meantime, let me create the invite for this too, so everyone can join it up. 1 second. All right, there we go. Bet. All right, what's going on, everyone? What's up? Okay, so we finally started. What's going on, everyone? I hope everyone's having an amazing day, because I know I am for sure. A little bit tired right now. You know, I woke up from my nap, but that doesn't matter, right? So, what we're going to be covering today. Hey, what's going on, guys? What's up in my YouTube chat? What is up, everyone on the Discord? All right, so today, right, as people join up, what I'm going to be reviewing, it's going to be a short class, right? Because I'm going to be making these classes a lot shorter, because I practically repeat the same thing every day, to where, you know, you guys are kind of understanding it as we go on, right? So, of course, the reviews will get a lot faster. You know what I mean? But anyways, the whole reason I'm doing this class today is mainly because of the, what's it called? Wait, let me see. Oh, bro, what's up? Tendito, I think that's your name. Tendito. What's going on, my man? What's up? So today, guys, I'm going to be reviewing, I'm sure you guys saw it, I'm going to be reviewing a 100-point trade that we ended up catching. Ended up running about 300 points. Actually, ended up running about, let me see, actually. So we got an entry at 80. It ran 400 points. I'm not going to count it, of course, I'm not going to count it as a 400-point trade, but I'm going to show you guys exactly how to catch these trades from A to Z using my strategy, right? And yes, I use a strategy literally every day, right? Oh yeah, I don't know what Sam put in that chat, bro. That boy going crazy. You're freaky as hell. Nah, I'm just kidding. Anyways. Okay, so I'm gonna go ahead and screenshot here, and I'm gonna show you guys exactly everything, literally everything, right? So wait, actually, let me share my entire screen. I think it'll be easier. Okay, there we go. Right. Okay. So to go ahead and get this started, right? How we're gonna start, right? So let me first of all, I'm gonna go ahead and show you guys. I'm gonna go ahead and show you guys the alert that we ended up getting in the chat, right? I also ended up calling this on live today, like before it even ended up playing out. I called this live from A to Z. So for those who were there, and for those who do know how we caught this, you guys know, right? But what's up, everyone on YouTube? What's going on? All right, so here's the alert, right? So if I go ahead and put up the futures alert, here's exactly what we're gonna see, right? So today at 12 p.m. on the dot, we ended up catching NQ shorts at 18,380, right? Here's exactly how the chart looked, and you might be asking, well, nothing's going on in the chart, so what ended up happening? Well, let me show you guys, right? Literally 4 minutes after we ended up alerting, this trade ran 100 points. So how exactly did we catch this entire dump, and how did I'm not saying that this was luck or anything, but how did I know exactly why this was gonna dump, right? Let me show you guys using the strategy, right? And you guys know this is nothing new. We've been doing this for the last 2 months, on point, right? On point. The consistency has been on point. So let me show you guys exactly what I look for from A to Z on how you guys can catch these trades, you know, practically every day, right? So yeah, I'm gonna go ahead and put this to the side for a second. Okay, so here we are on the charts, right? And you might be like, oh, there's a shit ton of lines. Like, what am I looking at? Well, I'm gonna show you guys. It's actually really easy. And once again, guys, for my YouTube chat, guys, I'm seeing all the welcomes, guys, or all the what's good and all that stuff, guys. Welcome. All right. So let's get this started, right? So the ticker that we traded today was NQ. You guys know I always trade NQ. NQ is my go-to thing. I love NQ, right? So right off open, what ended up happening is here. I'm gonna go ahead and do the replay real quick. All right. So let's say that the market opened at like 9, we're like 1 hour into the market, right? So like this, right? I'm sure you guys know, for those that have been in my previous classes, because I repeat this practically in every single class, the first thing you guys always want to do before you get any setup, before you get any trend, before you get anything, every single day, you guys must have your levels of liquidity marked out. Now, I'm sure, I'm more than positive you guys know what a level of liquidity is, right? I'm sure you guys know, right? I love, bro, Kenny, bro, much love to you too, bro. Oh, and by the way, if you guys want the recording to the class or want the recording to every single class, here, you know, I'm close to 1,000 subs, so I'm gonna be promoting this here and there. That's if you guys want to check it out, right? Anyways, okay. So the first thing to my strategy, which I use every single day for those that have seen my trades, you guys know, right? The first thing you always want to make sure you guys do is you have your levels of liquidity marked out for the day. Every single day before I go to sleep, I always mark out every single level of liquidity to make sure it's up to date for the next day, right? So how do you find these? Well, it's actually super easy, right? So before I go ahead and mark these levels out, of course, I have to be fair for my new people, you know, the new people that are new to trading. I'm gonna show you guys exactly what DOL is, what it stands for, and how exactly you can find it. And trust me, you don't need to be a genius to find this. It's actually really, really easy, right? So the first thing we're gonna go ahead and do, right, is I'm gonna go ahead and explain it, right? So pretty much what drawn liquidity is it pretty much, okay, you guys know what a trend is in the market, either a bullish trend or a bearish trend, right? Okay, so to start off with a bullish trend, you guys know that the market is gonna be steadily going up, right? It's gonna be creating higher highs, higher lows, right? So in a bullish trend, which will look ideally like this, right? And I'll show you guys a real-time example, right? In a bullish trend, the market will be constantly going up, right? As the market is constantly going up, you guys will notice that there are some pullbacks in this uptrend, right? Each pullback is a lot smaller than the previous one, which is where the higher high and higher low name comes from, right? So what is a higher high and higher low? Well, it's practically in the name, right? Pretty much what this is in a bullish trend, when the market is pumping up, every single pullback that the market has is known as a higher low. This higher low is practically known as drawn liquidity. And I'll explain to you guys exactly why this is drawn liquidity. It's really, really easy to understand, right? So we have right here, we have four higher lows, right? Right here we have the main low, right? Then we have the higher, all of these will be higher lows, right? And I don't have to explain why they're higher lows. It's in the name. You guys know what I'm saying? It's in the name, right? So this low is higher than the previous low. This low is higher than the previous low, and so on, right? So each and every single one of these levels is known as drawn liquidity, right? So all of this, I'm gonna type here equals DOL, right? What does drawn liquidity? What does DOL mean? Well, it's draw on liquidity, which is the first step to my strategy, right? If I could type it, there you go. Okay, drawn liquidity, right? Now, why is this liquidity in the market? Well, let me show you guys. It's actually super, super easy, right? So let's say, for example, right, it's pretty much common sense. If you guys, when a lot of retail traders like us, like literally every single one of us, right, what pretty much when the market trend is in a bullish trend, right, pretty much what we kind of think is that, wait, I lost my train of thought here. Pretty much when the market trend is bullish, ideally what all of us are going to be looking for is for longs, right? It could be calls, it could be longs, it could be whatever, you know, depending on what market you guys are trading. In this case, since I'm doing futures, I'm going to be looking for longs, right? Because I'm going to be playing with the trend. Now, let's say, for example, we think that the market is going to keep going higher right here, right? So for example, we go ahead and enter longs here, right? Where would we place our ideal stop loss? Well, we're going to place it at the most recent low, where, of course, where the market bounced from, because it just makes the most sense, right? The market bounced off this level, which pretty much shows you guys this is where buyers step in, right? So in this case, we're going to be using this higher low that the market created, the most recent low, as our stop loss, right? What ends up happening is, since a lot of retail traders like us are placing our stop loss at the same exact level, what that creates is a liquidity pool. All of our orders are waiting to get filled at this certain level, right? So what ends up happening is it creates liquidity, right? And you guys know liquidity is something that always gets filled in the market, right? It's why the market goes up and down every day. Some days the market is green, some days the market is red. Why? Because the market is filling these levels of liquidity as it goes, you know, wherever it wants to go, right? So same thing goes with a bearish trend, right? You guys need to understand. It's a must to understand this, right? Let me see. Why not go long at the higher low? Because you can no one knows where the higher low is before it's created. You know what I mean? You can't really like time the market perfectly, right? Because if I were to tell you, oh, buy at the lowest point, that's dumb. I can't really tell you exactly where the lowest point is, right? You gotta play after, right? You gotta wait for the after reaction, right? But it's an example. It's an example, right? Same way it goes with a bearish trend, right? For example, let's say that the market is in a downtrend, and it looks like this, right? For example, right? Every single one of these pullbacks is going to be a what's it called, a lower high, right? So every single one of these is going to be pretty much a lower high, which is drawn liquidity. Why? Because every single pullback that the market has, people, of course, will be what's it called? People will be entering shorts as the market is going down. With people entering shorts, they're going to be placing their stop loss at the most recent high, depending on where it is. So, for example, right? Let's say you guys entered shorts right here, right? Where would you place your stop loss? Ideally, what most people will do is place it at the most recent high and do whatever they want, right? Which creates liquidity at every single level, right? So that is the idea of drawn liquidity, right? So now you guys understand pretty much how simple this is, right? We're going to be going into today's market, right? So looking at today's market, of course, before the market opened up, which will look like this, for example, right? The first thing you guys want to be doing, right, is you're going to go ahead and mark out every single level of open liquidity in the market. So how do you find this out? Well, the first thing you're going to do is, of course, go on the higher time. Always go on the higher time frame. Could be the 15-minute time frame, could be the 30-minute time frame, could be even the 1 hour time frame. Right? For me, I like to personally use the 30-minute, maybe 30-minute time frame. Right? So okay. So let's say, for example, we go over to the 30-minute time frame. What can we see here? Well, we know that the market trend is in a bullish trend. How do we know this? Well, because the market is constantly going up, right? Sure, it might not be the cleanest candles, but if you look at it at a steady point, yeah, the market is steadily going up because the market is creating higher lows, right? How do we know this? Well, if you look at every low that the market creates, it's a higher low from the previous low, right? So we have this low, we have this low, we have this one right here, we have this one. You guys get the idea, right? Like the market is steadily going up as it's in an uptrend, right? Although it doesn't look the strongest, we are technically in an uptrend because the market is creating higher lows as we go, right? But before we created this uptrend, keep in mind there was a downtrend, right? So if you zoom out a little bit more, you guys will see that, yeah, before the uptrend happened, yes, we did have a downtrend before all of this, right? So drawn liquidity, yeah, exactly. Drawn liquidity is pretty much marking out every single high in the market and every single low in the market, right? And you guys pretty much understand exactly why. It's really easy, right? The whole point of this is because in every rejection, as the market is going down, every pullback, right? That's where people enter their shorts or their longs, or depending on the direction, right? And that's where liquidity is made. And you guys know liquidity is like a magnet in the market, and you guys will understand exactly why, right? So let's say, for example, the market is in a downtrend right here. How are we going to find the drawn liquidity? Well, by looking at the current market, for example, right now, we're going to be marking out every single high that the market has. Of course, the most recent high, which will be right here, right at 18,483. Why is this the most recent high? Well, I don't really have to explain it, right? It's the closest high that we have, right? As we go on, right, we have a high up here. We have another one right here. You guys get, it's really, really easy, right? All of these levels are known as drawn liquidity, right? So why is this so important, right? Blast, I used your A plus strategy twice on Asian session, and they both played the same. Super happy premium communities elite. Hey, Jets, thank you, man. Thank you, my man. But okay. So the reason why drawn liquidity is so important is because when the market sweeps drawn liquidity, it has a chance of forming an MSS model. Now, what is an MSS model? Well, it's actually really easy. This is known as a market structure shift. Pretty much what it means is if the market trend is bullish and we take out a level of liquidity, there's a good chance where the market trend could go from bullish to bearish, right? And if you guys don't want to learn more about MSS, which you need to understand before you guys trade, at least my strategy, here, this should help you out, right? I'm gonna go ahead and put the video right here. It's a 20-minute video. Honestly, it's really, really easy to understand, but it's a must, right? So here it is, guys. Here it is, right? So I just put it in the chat. If you guys want to save it for later, feel free to, right? But okay, now, right now we have all the levels of liquidity to the upside and to the downside. The next step to, of course, to the strategy is you guys need to make sure you know what the current trend is. Now, I'm sure you guys know this entire week has been a complete mess, right? Is this recorded? Yes, it is. Yes, it is. Here's the recording, right? So you guys know this week has been a complete mess with the trend. You know, the global recession scares and all that stuff. it makes the market go crazy, right? And not in a good way, right? There's buying, there's selling all over the place. So trading this week is a little bit tricky, right? So the way you guys find a trend is you guys need to go on the smaller time frame. It could be on the 5-minute time frame, it could be on the 15-minute time frame. For me, I get a lot of questions asked like, oh, what time frame do I always trade on? The answer is the 5-minute time frame. It is my go-to time frame. I don't ever switch it. I love the 5-minute, right? So by going on, now that you guys have your higher time frame drawn liquidity marked out, we're gonna go over and look at the smaller time frame, such as the 5-minute time frame. Now, we want to go ahead and identify what the current trend is, right? But we can't know what the trend is before the market takes out drawn liquidity, right? So you guys might see right here, yeah, we might be in a pretty nice trend here, a nice uptrend as the market is creating higher highs and higher lows, right? But don't be so fast to be so bullish, right? Because you need to understand the pretty much what the market wants to do in the bigger picture, right? So how do we know this? Well, by using drawn liquidity, you guys can see that, yeah, the market trend is currently really, really bullish, right? And we have drawn liquidity right around the corner at 483.25, right? Which is right here, right? You guys can see why this is drawn liquidity. It's pretty much the highest point the market has gone to, right? So what can we do from this? Well, the first thing we want to go ahead and do is see how the market reacts based off this level, right? So if I pull up the commentary channel, right, I'm going to go ahead and put it up right here. I'm going to read to you guys exactly what I ended up telling you guys right off open, right? So here, let me go ahead and pull this up. Okay. So right off open, you guys see at 9:58 in the morning, about 28 minutes before the market, after the market opened, I went and told everyone, coming into market open, looking at NQ, we might have a setup here, right? Looking at NQ right off open, it just finished taking out the high of day, which is the drawn liquidity at 483, right? We just finished taking out high of day, which is this level right here. You guys can see it. If I play it over, what ended up happening is like this. So I'm gonna give it some time. Like this, right? So we took out this level of liquidity. Now we want to see exactly what the market reaction is. Is it a strong reaction or is it a weak reaction? How do we know this? Well, we need to look at how the candles are moving. Are sellers stepping in? Are sellers not stepping in? You know what I mean? It all depends on that, right? So right here, you guys can see that we ended up taking out liquidity right here, and buyers seem to be holding this up, right? But don't be so fast to think that, right? We need to see what the strong trend is. Yeah, sure, it might look like buyers are holding this up, but buyers are not breaking any highs. Keep that in mind, right? We're trading around this range, right? And what ended up happening shortly after is we're forming some sort of a bearish market structure, like pretty much a bearish market structure, right? So what we can do from here is we kind of already know what the trend is, right? The trend is trying to flip from bullish to bearish. How do we know this? Because first of all, the market ended up taking out this level of liquidity, right, at 483. Right now, buyers are getting a little bit weaker and sellers are getting a little bit stronger as they are taking control. So how do we trade this? You might be asking, right? So let's kind of catch up here, right? I'm gonna write here confirmations that you need, right? So confirmations. First one being drawn liquidity, second one being the trend, right? So we know exactly what drawn liquidity is. If the trend is bearish, we know drawn liquidity is down here. If the trend is bullish, we know drawn liquidity is up here, right? Let me see. Is it a good idea to request a payout like everything you can? Yeah, bro. I mean, the whole point of a funded is to make money off of it. So yeah, request the whole entire thing. Yeah. MSS is basically when price manipulates the high and low. Okay, so it's not really price manipulating the highs and lows. It kind of is actually a little bit, right? So pretty much what MSS stands for is market structure shift. All it is the market structure or the market trend flipping from bullish to bearish or from bearish to bullish. It's that simple, right? So in this case, yeah, the market structure is bullish. We know this because, of course, we're creating higher highs as we go on and higher lows, right? Now, you guys need to keep this in mind. Anytime that the market takes out any level of liquidity nearby, there's a good chance that the market could create a shift, right? It could be off any level. There's no, you don't have to like pick a certain level. No, off any level of liquidity, when the market takes it out, there's a good chance that it can actually, yeah, it's as simple as it gets, right? There's a good chance where the market can go ahead and reverse, right? Which is why on this setup, it's pretty much why I was so quick to tell everyone, I'm like, guys, yeah, we're taking out liquidity here. There's a good chance where the market can go ahead and reverse back down. So how do we trade this? Well, let's go ahead and catch up here, right? So under the confirmations, we have drawn liquidity, we have the trend. Our third confirmation will be the MSS model, right? Which would be this model right here, right? After the market sweeps drawn liquidity, right, and the trend starts flipping bearish, right, that's when the MSS starts checking out, right? The MSS is going from being bullish to being bearish. That's simple, right? Now, Now that we know that the market trend is overall pretty bearish, right? We don't have, like, you might be asking, how do you really enter off this and how do you know what to target? Well, it gets even easier, right? So the last confirmation, which will be the cherry on top to the setup, will be a fair value gap or an inverse fair value gap, depending on what you guys want to trade, right? So in this case, how do you find a fair value gap? Well, I'm sure you guys know that I trade NQ, right? I trade both NQ and ES, right? So when we're trading both NQ and ES, you guys, there's pretty much a point system to finding fair value gaps, right? So I'm gonna write it right here, right? So here's the point system for fair value gaps, right? So if you guys are trading NQ or QQQ for my options traders, right? You guys want to be looking for a 40 plus point candle. I'm gonna show you guys exactly how to find this 40 point candle, right? So 40 plus points, right? When you guys are looking at ES, for example, right, it should be anything more than 10 points, right? I'm gonna show you guys exactly how to find this, right? It's really, really easy, right? So the way you guys find fair value gaps is you guys need to make sure that you guys find a really, really big candle in the market that has an imbalance. How do you find this? Well, by using the point system, right? So you guys can see that shortly after, yeah, the market trend was extremely bearish, and out of nowhere, we ended up getting a really nice selling candle, right? Compare this candle to the rest. You guys see what I mean? Like, the trend, or the fair value gap is definitely there. The way we know this is because if you guys measure it, the way you guys measure the candles is if you click on the measuring tool right here, the little ruler thing right here, you measure it from the complete top, yes, including the wicks, right? You measure it from the complete top to the bottom. Anything more than 40 points, which is right here, right? Anything more than 40 points will be a valid fair value gap, right? So in this case, we know that the market trend is bearish, right? We know this because we're sweeping liquidity, right? We know that the trend is bearish, and we formed an MSS on the way down, right? So what we're going to do in this case is we're going to go ahead and mark out the fair value gap from the top to the bottom, which will look like this, right? And now we have a fair value gap, right? And here, let me catch up with the chat to make sure everything is making sense to you guys. Let me see. Okay. Let me see. This trade broke my... Oh, bro, EB trades, bro. That's amazing. That's amazing. What intervals do I trade on? I trade on the 5-minute time frame and on NQ. The 5-minute. I do not use the 1-day time frame. I use the 5-minute time frame. Let me see. I don't use any of those, actually. I don't use those. Here, let me catch up with the chat. How much will you bring a 50k? Bro, Yogurt, it's as the second you're able to request a payout, just take it. There's no like limit. Just take the money. You know what I mean? The whole point of a funded account is to take the money, right? So yeah. Actually, yeah, just leave it alone. You don't need to do that. Now, okay. So now we have pretty much all the confirmation behind this trade, and we have the fair value gap. Simply all we're looking for, which I'm gonna pull up in the commentary channel, right? All we're looking for here, right, is when we created the setup, right? Here it is, right? So the volume is finally picking up on NQ, which calls for some setups to be made. So here's what we're watching, right? Keep in mind, guys, we have all the confirmations behind this trade, right? So looking at NQ on the 5-minute time frame, right? As NQ is taking out every single level of liquidity to the downside, which is this level, which I'm going to mark out right now, right? So we have this level, right? We also have this level, and we have this low right here, right? So what I told everyone is now that NQ is taking out every single level of liquidity, we know that the trend is bearish and we still have room to go lower. Why do we know? How exactly do we know, how NQ has room to go lower? Well, it's actually really easy, right? Now, you guys might be asking, we took out 378, right? We took out 378 and the market is pumping up like this. Oh, not like that. Like this, right? Doesn't this signal that the market is taking out drawn liquidity and forming an MSS back to the upside? Well, not really, right? We know this because the market still has room to go lower. Keep in mind, we took out this level of liquidity and the market kept going lower. It wasn't a sweep to the point where we're going up instantly, right? We took out this level and we dumped all the way back down into this low right here. Now, keep in mind, the market never took out 339. We almost took it out. If you guys really zoom in, we almost took it out by like 2 points, right? But we never did, right? Now, let's say, for example, if we would have taken out this 339 level, I would have never traded this, right? What I would have been looking for was an MSS model, right? Which looks like this, for example, right? So we took this out and we look for an inverse, right? But now that the market never ended up taking this level of liquidity, right? It's still telling us that the market has room to go at least back into this 339 level, right? So how do we trade this? Well, it's as simple as looking for a retracement back into the fair value gap, which I told you guys right here, right? I told everyone, I'm like, guys, we never took out 339, right? I still believe we have room to go lower because we have this fair value gap and we never took it out, right? So what we can do here is look for a simple retracement, after we get the retracement, all we're looking for is a simple rejection, and that's when we enter short. It's that simple, right? So what I told everyone here is I'm gonna look for a continuation, a continuation back to the downside for now, right? But if NQ ends up taking this level of liquidity before the fair value gap gets retraced into, which is what I told you guys right here, right? If it looks like this, right, we take out this liquidity and we go back up, I will be looking for an inverse like this, right? But if we never take out this liquidity down here, what we're gonna be looking for is a simple retracement into this like this, right? And we go back down, right? That's what I'm looking for, right? Now let me catch up with the chat, right? Let me ask you guys, is this all making sense? Because I don't know if I'm talking too fast. Let me know. Maybe you guys have some questions. Let me know, guys. Let me see. Where's the main point of realizing if I have a fair value gap or an inverse fair value gap if it plays out? Okay, good question, man. Good question. So for those that didn't understand, right? It makes sense. I'm just learning the terminology. Okay, perfect. And if anything, let me know. Would you not have entered on that inverse fair value gap? Are you talking about this one right here? This one, right? Yep. No, the main reason I didn't trade this is because there was no trend. Okay, for those that were in the live, you guys remember, right? The reason I didn't trade this inverse fair value gap right here is because there was no trend in this market. Keep in mind, we started getting a trend here, right? When we were breaking out lows and a lot of volume was stepping in, right? So this is when you start looking for fair value gaps. But when you guys are trading in a very, very choppy trend, like this, for example, where there's nothing going on, right? These fair value gaps are not very quick to play out, right? So if you guys want to be better safe than sorry, I would not take a fair value gap that looks like this, right? The fair value gap is there, but there's no trend behind it, right? So here, let me catch up with the chat one by one. So for Ben, right, how do you know whether to play a fair value gap or an inverse fair value gap? It's actually really, really easy, right? So I'm gonna show you a little example right here, right? So let's say, for example, right, let's say, let me do this real quick. Let's say that the market trend is in a bullish trend, right? So how will a bullish trend look like? Well, it will look like this, right? Now, out of nowhere, we created a really big fair value gap, and we kept going up, right? So the fair value gap is in this case, right? So how we're gonna mark it out is like this, right? We mark out the wick, we mark out this wick, right? We have a fair value gap right here, right? Now let's say, for example, we have drawn liquidity up here, so meaning that the market never took out drawn liquidity. So we have a bullish fair value gap, but we never took out drawn liquidity. So what you're gonna be looking for in this case would be a simple retrace. Since we still have room to go higher, you're gonna be using the fair value gap as an entry point to go back up, right? So the way this will look like will be like this, right? Simple fair value gap retracement into the midpoint. It could be anywhere, but ideally it will be into the midpoint. After you get the bounce up, right, you're gonna start looking for longs in this case, right? So your long position will look somewhat like this. You place your stop loss at the most recent low, just like that, and your price target will be up here at the drawn liquidity, at the most, the nearest drawn liquidity, right? Now, this is how you trade a regular fair value gap. Then, of course, the market will go your way, just like that. Right, now for an inverse fair value gap, how do you know whether to take a fair value gap or an inverse? Super easy. Now let's say we have the same exact fair value gap, right? And of course, as the market trend was going up, we created drawn liquidity, right? So you're gonna be marking out every single level of liquidity, just like this, right? Every single low, drawn liquidity, drawn liquidity, drawn liquidity, right? Now, the way you're gonna know what to target and how to play it is, let's say, for example, we have the same exact fair value gap, like I said, right? But instead of us retracing back into it, right, before we took out drawn liquidity, let's say that we took out drawn liquidity first, and then we're starting to go back down inside of this fair value gap, right? The reason you won't take longs off this bullish fair value gap is because the market already took out the drawn liquidity to the upside, meaning that it is no longer interested in going any higher because the liquidity and all the orders inside of this level already got taken out, right? The whole reason we're looking to take longs here is because this level is acting as a magnet, right? If we already swept the level, right, but we never went inside of this fair value gap, you will not be looking for an uptrend, right? In this case, you're going to be looking for an inverse, right? Main reason being is because, of course, let me mark this out. It's because, of course, we already took out the high up here. Do you get what I'm saying? All right, so I'm looking at the site for more drawn liquid. Yeah, so pretty much what I mean, to kind of summarize it all up, is when the fair value gap doesn't matter. It could be a bullish one or a bearish one, right? You could play either way, right? The only thing that matters is before the fair value gap plays out, you need to ask yourself, have we taken out liquidity? Do we have room to go higher, or did we already take out liquidity to the point where the market is not interested in going any higher or lower to the point where it's going to reverse off this fair value gap. You know what I mean? So that's pretty much how I would play. And Ben, let me know if that made sense to you. And that goes for everyone, right? So yeah, this is exactly how I know when I play fair value gaps, and this is when I know when I don't, when I play inverse. It made sense? Okay, perfect. Now let me catch up with the chat all the way up here. Is this being recorded? Yeah, it is. And of course, if you guys wanna, of course, show some love and subscribe and all that stuff, my YouTube channel is right there. This is where I live trade, where I post my classes. It's all there, right? Okay. Let me go ahead and catch up with the chat in a second. Let me see. While you're explaining, this is just more. Okay. Let me see. Question: the candles have to reject after fair. Yes. Cool, Jay. Yes. Okay. So let me show you what I mean. Right. So if I show you my alert, right, I do not enter as price goes into the fair value gap. I enter as price rejects off the fair value gap. You know what I mean? Because you need to make sure that you have the cherry on top of sellers gaining control again, right? So you guys might notice when I entered shorts right here, I didn't enter all the way at the top of the fair value gap. I entered as we were getting the sell-off. Why? Because before you take the bearish fair value gap or the bullish fair value gap, you guys need to make sure that sellers or buyers are stepping in from the fair value gap. So yeah, always make sure that sellers are stepping in if it's a bearish one, and always make sure that buyers are stepping in if it's a bullish one, right? So that's how I would do it, right? Now, I trade gold mostly. How do you trade it? It's the same exact way. There's no difference, right? There's no difference. Why do you mark out that drawn liquidity level? Let me go ahead and find out which level you're talking about. Hold on. Let me delete all of this because I don't really need it. Okay. So, which level of liquidity are you talking about? Are you talking about this one down here, the 339 one? In the meantime, let me catch up. Do you normally take a trade later into the day? I've noticed most setups seems to... Okay, snaps. Okay, you gotta keep in mind, I don't control the market, right? I can't control the market. I'm just a trader, right? So there's no certain time limit that I give the market to give me a setup. It could be in the first 5 minutes of the market open. It could be in the last 10 minutes of the market close. You know what I mean? Whenever we get a setup, if it plays out, I'll take it. You know what I mean? So there's no like certain time that I trade. But yeah. My thing is, what times are you looking for this? Oh, yeah, like I said, there's no time. It can happen any time of the day, right? Usually it happens throughout the morning because, of course, you guys know that the morning is more volatile than the afternoon session, right? So, yeah. Yeah, okay, so 339. Okay, so the way I found this 339 level is actually really easy, right? If you zoom out, right, you guys might know that we have drawn liquidity right here. You guys see them? Okay. First of all, identify the trend, right? The trend is a bullish trend, right? So we have this low, right? We found this low, market pumped up, we pulled back down, found this low, pulled back up, pulled back down into this low, pull back up, and so on, right? So every pullback that the market creates is going to be drawn liquidity, right? So we have this one, which already got taken out, so it's not really as important anymore, right? But yeah, that's how I have 339. It's just a low that the market created right here, right? Thank you for this. Of course, Sabrina, I got you. Do you wait for a candle to close to enter a trade? No, I don't wait for a close. I wait for either a bounce or a rejection. I always do that. You don't really always have to wait for a close. As long as the candle is holding up into your direction, it's when I'll take it. On gold, is a 40+ point fair value gap? No, on gold, I believe 3 to 4 points or more is valid. So, of course, gold is a different price. It moves differently. So, I would say, yeah, about like 3 to 4 points will be my go-to for gold. So, gold, 3 to 4 points. NQ, 40+ points. And ES, 10+ points. Do you mark out liquidity on the 15-minute time frame? Yeah, you can find it on any time frame. Right? Just know that the higher the time frame, the better, because you're filtering out less candles. You get what I'm saying? So, yeah. Bro, you made it so simple. Basically, all of liquidity has to be retouched. Exactly, cool, Jay. Yeah. So, not every level of liquidity, most levels will get touched, right? So, think of it as a magnet, right? Depending on what the trend is, right? If it's a bullish trend, the nearest level of liquidity will act as a magnet. The trend likely won't pretty much flip until that level of liquidity gets taken out. Now, if the trend is really bullish, we can take out multiple levels of liquidity, right? And so on, right? Do you trade? Oh yeah, I already answered that. What if there's a huge fair value gap on. Okay, KB, keep in mind, I'm sure you know this, but for those that don't know, when you guys are finding an entry point off a fair value gap, right? I use the 5 and 15 minute only to find my entries. Now, I'm not saying that you're only limited to finding fair value gaps on the smaller time frame. Yes, you can find one on the 1 hour, on the 4 hour, even the 1 day time frame. Now, the problem is here, right? When you guys are finding fair value gaps on the 30 minute, the 1 hour, or even the 4 hour time frame, you will not be using these fair value gaps as an entry point because simply they take too long to play out, right? So what you're going to do is you're going to be using these fair value gaps on the higher time frame as your bias, right? Meaning, if the trend is bullish on the 1 hour time frame and we have a bullish fair value gap on the 1 hour time frame that we're currently bouncing from, you're going to be using that as a bullish bias. Meaning, when you go over to the smaller time frame, you're going to be looking for bullish setups, right? So if you have a 1 hour bullish fair value gap, you're going to go over to the 5 minute time frame and you're going to start finding a 5 minute bullish fair value gap. That's simple, right? And then depending on what the 5 minute does, that's when you find your entry point, right? That's what I would do, right? But yeah, I do not use the 1 hour nor the 4 hour time frame as entries. I only use the 5 and 15 minute time frame. Please leave these key down. Oh, here, Cool J, I have this all recorded. I have it all recorded. So if you want to ever, get back into it, it'll be there. Okay. What's 4 points? Okay, so pretty much what the point system is you get the measuring tool. You can measure out any candle. Let's say this one, for example, right from the complete top to the bottom. Right, this right here, this number right here where it says minus 71, right? This is 71 points, right? It's not, when you guys are trading futures or gold or NQ or ES, you're not trading the dollar amount. Sure, it might say here 18,939, right? That's not $18,000. It's 18,000 points, right? It's different to stocks, right? Because I trade futures. So yeah, when you guys are trading futures, any candle they measure out, let's say this one for example, it's only 20 points, right? This one for example, 34 points, right? So that's what a point is. Let's see. Had W's all week with your alerts. Thank you for. Hey, appreciate you, my man. Yeah, we've been on a 2-week winning streak, or at least so far, right? Hopefully we can keep it going all week, but we'll see. Only time will tell. You know what I mean? But yeah, we've been killing it lately. Yeah. What do you do when the wicks stay close and go back and forth over liquidity? Zam, that is when you know that no direction is in control. What does that mean? Well, it means that the market trend is choppy. What does that mean? Well, you simply don't trade it, right? Pretty much what that means is if the market is not giving you a certain direction or a certain trend, you don't trade it. Why? Because if you're trading chop, right, that means that the market is constantly going up and down. You don't know where the market is going because there's no trend, right? Keep in mind the trend is your friend, pretty much. Think of it like that, right? So if there's no trend, right, and you're in a position, you're practically gonna be gambling it, right? Because you're taking a 50-50. You don't know if the market is gonna be going up or down, right? So when there's a lot of wicks in the market, like this, for example, right? Like this, right? There's too many wicks. It's green, red, green, red, green, red, over and over and over. You will not be trading this. Why? Because there's no reason to trade it. It's choppy, right? There's no trend behind it. So you don't trade this. Now, when the market is constantly giving you a trend like this, for example, where we can see that the market is constantly going down, this is when you start trading it, right? Because we have a bearish trend, right? So that's how you do it. There was some discount. Okay, I got you. So for those on my YouTube, right? A quick discount, right? If you guys do want it, it'll be code here. Let me go ahead and get it to you guys, real quick, because I'm seeing that some of you guys are interested in, maybe learning more, getting lives or getting alerts, right? I'm gonna post this on my YouTube, only my YouTube, right? So here. There you go. Okay, I went ahead and put the code in my YouTube, right? So it'll be code trial. If you guys want to try it out for a month or whatever, use that code. It'll help you guys out for those asking. Anyways, let me catch up with the chat, right? Let me see. How often do we do these classes? I do them practically almost every day. Almost every day, right? Let me see. Maybe talk about what a point is worth in dollars. Okay, good question. Okay, so here it is, right? Before I continue breaking down the setup, right? So what is a point, right? A point is 0.25 times 4, right? You might be asking, right? So is options trading and future trading different? Yeah, it is. It's actually really different, right? In my opinion, I don't think options is worth trading. I do not like options. I did options for 3 years. It is not stable. If I can give you the best tip ever, it will be to not trade options. That's the best thing I can tell you. It's not stable, right? Main reason being is because of the, what's it called? Main reason being is because options has a thing called theta, and it is not stable. It pretty much eats up your contracts, right? But anyways, right? So what is a point? Well, a point is pretty much when the, okay, you guys see here how it says 18,030, right? When it goes to 18,031, that's 1 point. If it goes to 18,035, that's 5 points, right? Now, there's a difference between a point and a tick, right? So in 1 point, there's 4 ticks, which is 25. Think of it as like 25 cents times 4 is $1, right? Now, when you guys are trading NQ, right? What this stands for is when you guys are trading NQ, 1 point is $20, right? 1 tick, or actually no, yeah, 1 point is $20. When you guys are trading M and Q, right, 1 point is $2, right? Because you guys know 1 micro is 1/10 of a mini, right? Meaning if you're trading 1/10 of a mini, that'll be $2, right? If you trade 10 micros, right, that'll be $20 per point, right? Because 10 micros is a whole of a mini, right? So LC for anyone asking, this is the price behind you know, pretty much NQ, right? But yeah, now let me catch up with the chat in the meantime. Maybe a stupid question. Hey, SK, there is no such thing as a stupid question. Just keep them coming. Keep them coming. But why do we not mark out 18,250 as drawn liquidity and 18,220? Well, let's go ahead and find out. Right, so 18,250, right? Well, if you go ahead and pay attention, there's no bounce off 18,250, right? The reason we have 18,220 is because the market bounced off this level. You can see it right here, right? The market pushed up, pulled back, found this low, and of course bounced back up, right? So this is the whole reason I have 220, right? 250 is not a valid level because nothing happened off 250, right? You guys can see right here, nothing ended up happening here. Yeah, sure, you could have marked out 18,236 as drawn liquidity, yeah, right? But 18,250, there is nothing at 18,250, right? So there's no point of marking this level out, right? So yeah. Where do you see how much time the candle has to close? It's actually really easy. It'll be right here. Like there's gonna be like a little timer under the under the price. That's when you know when the candle's gonna close, right? So yeah. So you always wait for a retest before you enter a trade. Always, yeah, always. You have to, pretty much. David MSS for me, bro. The market is closed, Fernie. The market is closed. If there isn't anything to do, there's no exactly. Yeah. Does this apply for Forex? Yes, this applies for everything. Because simply what we're trading is volume in the market, right? We're trading volume and liquidity, right? So yeah, it applies to Forex, futures, crypto, stocks, options, everything. Does the strategy apply for both NQ and MNQ? Yeah, NQ and MNQ, they're the same thing, just different contracts. What is NQ and ES? Okay, NQ and ES. NQ is QQQ for stocks, and ES is SPY. So Nasdaq and what is the other one? Nasdaq and S&P 500. That's what it is. Yeah, so that's what it is. Let me see. How many pips for Forex? Okay, that I can't tell you because I've never traded Forex, right? So I've never really backtested a chart, but it's actually really easy to backtest. I have videos on it, which I'll link right here. It'll be right here. Hold on. This one. Okay. So if you guys want to learn how to backtest Forex, crypto, whatever it is, there it is, right? There it is. Okay. So now that I caught up with all the questions, right? Wait, how do I get into futures? What platform? Do Tradevate. Tradevate is my go-to. Tradevate. There it is. Okay. So now that I caught up with all the questions, right? Now that we're getting the retracement back into the fair value gap, all we have to do is wait for a simple rejection. How does the rejection look like? Well, let me show you guys. Right? It'll be right here. Okay, so the way the rejection looks like will be like this, right? So we retrace into the fair value gap as we expected, right? And now we know that we have room to go lower. All we're looking for is a simple rejection. We got the rejection right here, and that's when we entered shorts, right? So we place our stop loss at the highest point where the market rejected from, which in this case will look like this. So we entered at 880, so around here. We're gonna go ahead and place our stop loss right here, and our price target all the way down here, right? Boom, the trade is done. Now all we have to do is enter the trade and let it do its own thing, right? Long story short, look how this played out, right? Boom, right? price target hit just like that, right? Resulting in a simple 100-point trade in 4 minutes. 4 minutes. Look at this candle, guys. And you guys might be asking, well, probably this doesn't happen every day. Maybe I'm like, oh, you know, like, no. You guys can look through all my alerts. We trade the same exact strategy every day. I break down the strategy in every single class every single day. Last week we had a 100% win rate, right? Using the strategy, it's that simple, guys. And I have videos on all my on my YouTube explaining my entire strategy every single day. It's so simple, right? So yeah, here, let me catch up with the chat in the meantime. Yeah, so, and here, if you guys want, I can show you guys literally all the wins from today. It could be, let me see, the wins channel right here, right? Look at all the wins, right? Here's some 5,000, 1,000, 1,000, 2,000, almost 1,000, 100, 500, right? This is all from today by using the simple fair value gap strat. It's so simple, guys. I promise you guys, there's no strings attached. It's this simple. I can't stress it. Like, you know what I mean? But yeah, if you guys want to look for more recaps, it's all here. Look at this. 85 points. 135 points. Let's see. Another 85 points. You guys get the idea, right? Another 100. Guys, this is all journaled in my alerts, right? So yeah. Now, in the meantime, I have some time to answer some questions. Is this the only strategy I use? There's no reason for me to add any more. You know what I mean? There's no. If it's not broken, why fix it? You know what I mean? If this is what pays the bills for me and does everything for me, why would I ever change it? Right? I'll need to watch the videos so I can get more comfortable with the strategy before trading. Ari, I think that's your name, Ari B. I promise you, it's so simple. Here, if anything, this should help you out right here. Boom. Is that on the premium group? Yeah, it is. It is. It'll be all here, right? And of course, if you, I went ahead and left a discount in my stream, right? So of course, if you want to check that out, I'll be there. Yeah. So if it breaks one liquidity, will it break the other one in due time? It could, right? You need to make sure, you need to kind of know what the trend is, right? If the trend is really, really bearish, then yeah, we have room to go even lower, right? But keep in mind, okay, here's the best example I can give you guys, right? Think of it like this, right? If the okay, let's say that you fall out of a plane, right? And there's balloons, there's levels of balloons, right? There's 1 balloon, 2 balloons, 3 balloons, and so on, right? As you go lower, right? As the market is dying, or as the market is falling, or as you're falling off the plane, right? As you hit every single level of balloons, your fall will get slower and slower and slower because you're getting, what's it called? You're kind of getting caught by the balloons, right? Think of it like that, right? So if the market trend is constantly falling, right? Let's say that the trend, you know, whatever, we have some chop, and the market trend starts going down, right? Each pullback is going to get weaker and weaker and weaker to the point where it starts reversing eventually, right? Because keep in mind, the market is not going to always going to be going down forever, right? So as we hit every single level of drawn liquidity, you have the chance of every level of liquidity of a possible reversal, right? As we go lower, each level of liquidity that we take out is going to get weaker and weaker and weaker, right? So think of it like that. Let me know if that made sense, by the way. Let me know if that made sense, right? How do you make money if the price is going down? This is known as a short position, right? I don't know how to explain it too much, but yeah, you can make money from the market going down by entering shorts. There's a thing called longs and shorts and calls and puts, right? So you're pretty much betting on the market going down, right? On the trade today, if the wick hit the liquidity at 339, then there's no reason to say, yeah, exactly, Brian. So exactly how I explained to you, if the market, okay, if the market would have taken out this level of liquidity before it retraces to this fair value gap, I would not have taken shorts, right? I would have taken longs. Why? Because we took out liquidity. There's no reason for the market to go any lower, right? So like this, for example, right? We took out liquidity. There's no reason for the market to go any lower, and we start going up, right? So we're going to be using this bearish fair value gap as an inverse, like this, right? We enter longs off this inverse, and we target liquidity to the upside, right? So here, let me kind of clean this up for you guys so it looks a little bit cleaner. So for example, right, let's say we were to, of course, inverse this fair value gap right here, just like this, and now we're going back up, right? We're going to be using this bearish fair value gap as a long in position. Why? Because we're not looking for shorts. We're looking for a simple break above, right? So how would that look like? Well, like this. You get the close above. Now, you enter longs, right? Then you'll place your stop loss. You will enter your longs right here. You'll place your stop loss wherever the market rejected or bounced from, which in this case will be like this, for example, right? Let's imagine that there's a bounce right here, right? And you enter your longs. Your stop loss will be placed at the bounce. Your price targets will be placed up here, and up here, right? You could do it like this, for example, but yeah, you'll have 3 price targets, just like that, right? So that's how I would have taken it, how I would have taken this trade if the market swept 335 first. In this case, we never swept it, meaning that the market still had room to go lower. So we use this bearish fair value gap for shorts instead of longs, right? So hopefully that answers your question. Okay, how many contracts did I use? I use 15 micros. 15 micros is my go-to sizing always. What are points? Okay, so once again, for points is for only for futures, right? So let's say for example you're trading let's say Tesla, right? I know a lot of you guys trade Tesla. You know, if you measure it, this is $1.90 per candle. It's $1. But when you guys are trading futures, for example, NQ, right? If you measure the candle, the price right here, 111 right here, this is 111 points, right? There's just 2 different terminologies, right? For futures, it's not dollars. It's not $111. It's 111 points, right? So that's what it is. What's the difference between stock options and futures? Okay, so with stocks, you're trading options for the stock market, right? It could be Tesla, it could be Nvidia, Microsoft, whatever it is. But for futures, right? First of all, there's no theta in futures, right? You're not trading options for futures. You're trading the actual future itself, right? So you're trading contracts, right? With options, you're trading, you know what I mean? Like a strike price. With futures, there's no strike price, right? I don't know how to explain it. I'd have to link you a video for that because it's a little bit complicated to explain. There's just a bit of a difference there. Got it? Thank you. Got it? Okay, perfect. How do you know when the market is going to be chop or volatile? Based on Asia. Okay, well, it's actually really easy, KB. All you have to do is see if the market was really, like, you know, if the market was kind of barcoding, which looks like this, for example, right? Which would look like this, right? If the market is moving like this, right, do not trade it. As simple as I can put it, do not trade it, right? Now, if the market is looking like this, right, maybe it's not the cleanest, you know, but if it's steadily going up like this, right, that means that the trend is a bullish trend, right? So you could trade this, but if the market looks like this, do not trade it, right? So for example, right, if we look at today, for example, right, let's look at the price action. Off open, do not trade this. Why? Because the price action looks like this, right? If you base it, look at this. Nothing ended up happening. Now, if you look at that, when we started trading, right, you can see the difference, right? Right here, it looks like we have a bearish trend, right? Because the market is constantly going down. You can see it right here, right? Boom, market's going down. So that's how I would look at it to trade it. Okay, so you say you wouldn't, you would not trade options, but if QQQ moves the same as NQ, yeah. So if you guys, of course, you guys might have your preference. You guys might love options, right? If you guys like options and you guys want to follow my alerts or my ideas, you could, right? Because NQ and QQQ, they move the same exact way. So if I ever enter shorts on NQ, you could enter puts on QQQ and you'll make the same amount, right? Not the same amount, but you'll catch the same movement. Yeah. So yeah. In the meantime, let me see. Will those fair value gaps still remain valid going on to the next day? Okay, good question actually. So yeah, they would be valid going into tomorrow because they never got filled, right? Keep in mind, this fair value gap never got filled. Although we did reject off of it, it does not mean we can't reject off of it again. Yes, going into tomorrow, if the market retraces into it, we could use this fair value gap as another entry point for shorts. Yes, we could. What's your model entry? I use the fair value gap model. So of course, I kind of explained it already. I'm not trying to repeat myself so many times. So if you want to learn more from it, just click on my YouTube channel. It'll be, I think I can link it. Hold on. Let me see. Here it is, Francisco. I think, yeah, I can. Okay, click on that video. It will explain everything you need to know about my entry model. Yeah, there it is. But okay, yeah. Here, let me catch up with the chat in the meantime. Did you ever have a point where you would a break-even trader? Everyone has. Trust me. EB trades, don't ever think that. Okay, you can ask any successful trader. I'm not, you know, it could be any trader, right? That's profitable at least, right? Every single trader will tell you that they started off blowing their account at first. Everyone lost money. You can't master trading without losing money. That's the thing, because you need to make mistakes in trading to fix those mistakes, right? There's always a lesson behind the L's, right? So yeah, you gotta lose money to make money, pretty much. Okay, I've never done futures. I've only day traded options. First question: is it hard to take a trade? No, it's actually really easy. It's actually easier than options. right? It's only one button, right? Is futures more profitable using the same amount of money? Yes. Main reason being is because you don't have to deal with theta, right? Theta is a big hitter in the options market, right? If you guys time the market off by like an hour, you could lose money even if the trade goes your way, right? So yeah, in my opinion, futures just has all the pros and no cons, compared to options, right? So yeah, how much capital is recommended for futures? I would say about $1,000. $1,000 is good enough. Now, don't let that scare you. If $1,000 is not, if you guys do not have enough money to trade with, don't stress it, right? You guys can always trade with a funded account, which is about $30, and they give you about $25,000 to trade with, maybe $50,000, $100,000, or even $300,000 to trade with, right? So you could always use this right here. There it is. There it is. With those fair value gaps, oh yeah, I already read that. But I don't follow RPs. I have my own thing. Do you like the 15-minute order block with NQ? I do. I don't trade order blocks. I don't trade order blocks. What do you mean with what do you mean the fair value gaps were never filled? Okay, so the way a fair value gap fill would look like would be like this, for example, right? So let's say, for example, we have a fair value gap right here, right? Boom, just like that, right? It got filled because the candles went right through the fair value gap, right? In this case, in this fair value gap, yeah, we retraced into the fair value gap, but we never filled it up here. If you look at the price action, we never went above it, right? So that's what I mean. 1K with what brokerage? Tradevate. Can you still trade futures if you have to go to a 9 to 5? Yeah. What happens if you blow an account? You do not pay the money back. No. All they're gonna do is take away the account, and they give you a choice to either buy it back. Right? It's up to you. But no, you do not owe any money when you trade with funded accounts. No. Go to your giving free sauce. Appreciate you, my man. It's when I first started trading, it's what I would have wanted. You know what I mean? I was in your guys' shoes at one point. When I first started trading, I was confused. So it's the least I can do with you guys. You know what I mean? So yeah, that's why I do these classes so often. What's the best time to dedicate trading futures? 9:30 to 4 p.m. EST, New York session, right? So here, there's 3 sessions. There's Asia, which opens up at 6 p.m. EST till 3 a.m. EST. There's London, which opens up at 3 a.m. EST till 9:30, and then New York opens up at 9:30. That's right. Yeah, 9:30 a.m. EST till 4 p.m. EST. Right? New York. There you go. Okay. Do it take a percent? No, actually they do. Okay, so when you're trading with Apex, the platform that I use, for the first $25,000 that you guys make in payouts, you keep 100% of it. After you make that 25K, anything more than that, you keep 90%. So it's a 90-10 split. Is there a tutorial on how to use TradeRate properly? Yeah, I got you. It'll be this one right here. Okay, there you go. Do I usually trade the entire day? No. Once I get my first trade, I'm done for the day. So today, for example, we ended up catching the trade at 12, right? So if I show you the alert right here. Yeah, we caught this trade at 12. After we finished making the money, we got off the charts. So we had the entire day to ourselves, right? So yeah, no, I don't trade all day. Sure, sometimes the market might be slower than usual, meaning that we could catch some trades a little bit earlier, a little bit later. There's no way to tell, right? What's the recommended amount to start with futures? Recommended, I would say like 1,000. 1,000 is really good. The bare minimum that you guys could use for futures is 500. You need 500 to trade futures. What's it called? What was I gonna say? Oh yeah, if you guys don't have that money, you can always use a funded account. Option goes by percent. What is the difference between that and points? There's no percent in points. There's no percent in trading. Okay, I can show you guys my options alerts, right? In options, I used to give everyone my percent, right? When I used to do options, of course, right? 55%, you know what I mean? Like there's percents, right? With futures, there's no percent. It's based off points, right? Because you're making money based off the points and not the percent. How does a funded account work? Well, you pretty much pay the prop firm a certain amount, which is like $30, $40, and they'll give you a prop account with that money, With it could be 50K, 25K, and so on. I'm on it on lifetime. How does it take the average trader to handle this full time? For me, it took me about 2 years to become profitable. Keep in mind, I didn't have any mentorships. I never paid for a course. I never did anything. Right? I learned everything by myself. So for me, it took me about 2 years of trial and error, and ever since then, it's been pretty good. So keep in mind, everyone learns differently. Some people are a lot faster than some. A lot of people are a lot slower than some other people. Right? So you know what I mean? There's people that have been trading for 4 years and they still haven't gotten the grasp of trading. Right? So everyone learns differently. Is a prop account real or fake? It's fake money. It's fake money. But the thing is, you still make that money, right? Because if you hit the challenge and you hit the profit goal, Apex themselves will wire you the money that you made, right? So yeah. If you have the money, would you recommend starting a live account? Yeah. If you have the money, I would say do a live account. Yeah, it's so much better, right? But of course, some people don't have the money to trade with, so your only choice will be trading with a funded account. There's nothing wrong with trading a funded account. I do both funded and lives. In my opinion, it just makes the most. You can make the most out of it, pretty much. Um, is a funded account a proper? Yeah, it is. It is. Yeah, yeah. What's the best trade for not a lot of money? What do you mean by that? What do you mean? What do you mean by that? Here, let me catch up with my YouTube chat. David, I have recommended you to one of my friends, bro. Thank you, my man. Thank you. That means the world to me. Thank you. And by the way, guys, once again, for those that want to try out the premium on my YouTube, for those that want to get the premium, with the live trading, more classes, alerts, and all that stuff, feel free to use here. Use code trial. It will give you guys a little discount if you guys want to try it out for your first month, right? Wait, so if you pass an eval, you get the profit goal? No. Okay, there's a few steps to evaluation accounts, right? There is an evaluation account, right, or evaluation phase where you have to hit a profit goal. When you hit that profit goal, they're gonna change your account from an evaluation to a PA account. Anything that you make on that PA account is your money, right? So any money, let's say you made $3,000 today, right? You can request that money straight to your bank account, right? And that's how you get it. So like today, it started going down, and it took out levels and it kept going down. As you say, if we take out liquidity, it turns around. Not always. Not always. Keep that in mind. Not always, right? It depends on the trend, right? If the trend is steadily going down, yeah, we can easily reverse off any level. But if the trend is really, really bearish, then we can easily keep going right back down, right? What's a good funded account? In my opinion, I love the 50K accounts. They're my go-to accounts. I love the 50Ks. But yeah, here, let me see. Like for futures, it's 500 minimum. Are all the trades crypto? No, this is only for futures. 500 minimum for only futures. What's the difference between learning from you and RP? We have a different strategy. Yeah, we have a different strategy. I need a strategy for gold. Yeah, Scorp. You could use my strategy. It works for any market out there. It works for any market. Because what I trade is liquidity, right? And you guys know liquidity runs the market pretty much. Is the Apex challenge difficult? No, it takes like a week to pass. Like a week, maybe 2 weeks max, around there. It says 187 per month. No, it's not 187. When you guys go to the checkout and you guys use code Blastoise, which is my name, it will bring it down 80%. So it'll be like what, like $37 around there. So yeah, here. There it is. How often do I get a payout, or do you guys get payouts? Can you keep the money there for a few months? There's no point of keeping the money there, right? You can just request it. That's the whole point of a funded, right? I get a payout pretty much like once a month, but it adds up. It adds up. Right now, I requested a 10K payout, which actually it got approved today. My payout got approved today. Let me check my email actually. So I should get it next week. If I do get it, I'll send you guys a screenshot of the payout, right? But I usually request like from trading itself, like maybe like 10, maybe 20K a month. Off payouts. I have all the receipts. I have everything. But yeah. No, they actually pay out. Yeah. And keep in mind, guys. With Apex, you can have up to 20 accounts. Meaning, if you get a 2K payout for one account, multiply that by 20. That's $40,000 in 1 month. And yes, you can do it. I have friends one of my friends, he actually recently got a 40K payout. Not too long ago. Do you trade on a funded account? I use my own money. I use both actually. I use Fundis and my live account. It's more money. You know what I mean? The more accounts, the better. Thank you so much for making the Theo video. The Theo video. Wait, what? Is it a one-time payment or monthly? Okay, so for the evaluation phase, it is a monthly payment, right? When you guys pass the evaluation phase, it's a one-time payment, and that's it. That's it. Then you're funded for good. Oh, the video. Okay, perfect, perfect. Yeah. If I start trading futures with $1,000, real money, and I follow your live trades and get 100 points, how much profit is that? Well, let's go ahead and see, right? So let's see. I can't type. Okay. So you're saying $1,000, right? So let's say you would have traded 1 mini, for example, right? You would have put $1,000 into the trade, right? And you would have caught a 100-point trade, which looks like this, right? And you would have caught 1 mini for $1,000. You would have made $2,000 off this trade, on the dot. $2,000 off this trade. Where do we subscribe to your channel? Thank you, by the way. Thank you. Here, you can do it here. You can do it here. And yeah, if you guys wanna, of course, show some love, you know, and of course get access to more classes and live trading, it'll be right there. How is that possible? Because with futures, unlike options, you're able to calculate exactly how much you will lose to the point, and exactly how much you will make to the exact dot. So yeah, here I can do the math for you. So with NQ, 1 point equals $20. MNQ $2. For ES, 1 point is $50, and for MES, 1 point is $5, right? So that's how you do it. You can literally calculate how much you'll win and lose. That's why I love futures, because with options you cannot calculate how much you will risk per trade, right? It all depends on what the contract wants to do. If it wants to lose value, it will lose value without telling you, right? So yeah, that's why I like futures so much. Here, let me catch up with the YouTube chat. What's the code for the ATF discount? Is code Blastoise, like this. Indicators? No, I do not use indicators at all. I do not use indicators. I don't think they work. I don't think they really help you out. I do not use indicators. Wait, are you telling me that 10K you have a choice to either take it out or use it to trade? No, just okay. If you made 10K on a funded account, just take it out. The whole point of a funded account is to make money. It's not to hold it for like a years. No. It's to take it out and make your own money, right? Can you say how much you made from trading so far? I can't give you a certain amount, but it's definitely in the 6 figures. 6 figures. I became profitable about 2 years ago, I would say. And ever since then, you know, as time goes on, you make more. Do you draw your London high and Asia high as well? Yeah, always. Asia high, Asia low, London high, London low. Always. Yeah, you need to. Yeah, exactly, Twitch. Yeah, you there's no point of holding $10,000 in a funded account to hold it. You know what I mean? Take out that money and put it into a live account, then you can hold it. Yeah. That money, that is not real. Are you able to use it to take it out? Yeah, you can take it out. It's your money. They literally send it straight to your bank account. But what? That's a lot of profit. I'm gonna get back into the academy after this. And really try to sponge this in my brain. For sure, Brian. If anything, you can always DM me. I'll help you out. And that goes for anyone in here. Right, guys? If you guys need help, you guys want a mentorship or whatever, DM me. There's nothing wrong with DM me. I will always respond. How do you draw London and Asia highs? Let me give you a little secret here. So, ignore what I said about the indicators. I have one indicator, right? Which is this one. Right? What this does is... Here, let me go over to NQ. Right? What this indicator does... Oops. Okay. What this indicator does is it simply marks out every London high and London low, Asia high and London low, right? So the blue means Asia high and Asia low, orange means London high, London low, right? So if you guys want this indicator, which will help you out finding liquidity and all that good stuff, here it is. And then the settings will be, I want to mention, if you guys want it, just DM me. I have a few open spots available. I think I have like 3. So yeah, just DM me if you guys are interested. Let me know, right? But in the meantime, here's the indicator. Let me give you guys the settings right here. And then the style would be right here. Alright, this is the indicator that I use to mark out Asia high and Asia low, London high and London low. When sessions overlap, do you still use those high? No, if the liquidity already got filled throughout the session, there's no point of marking it out because it already got filled, right? So if it overlaps, there's no point of, like, for example, right here, right? We have Asia high up here, right? We have London high up here. It overlapped, meaning that this one won't be valid, but this one will be because it hasn't been taken out yet. If that makes sense. If that makes sense. But yeah, and by the way, guys, for everyone that wants to add me or DM me or whatever the case may be, I'll respond to all the messages after the class is over, right? But yeah, I mean, how much for your mentorship? I do it for okay. I have two. I have my okay. I don't want to promote it here because I don't know if I can. Um, but I have two things. I have the premium and I have a mentorship, right? The reason I charge a little bit more for my mentorship is because it allows me to pick and choose. You know what I mean? I don't know how to explain it. Like, it's just a smaller group that's like more dedicated to pay. You know what I mean? So I do it for 750, no time limit. I do the mentorship until you master trading. Like, I will not stop the mentorship until you master trading. It's not like a 1 month thing, a 1 week thing. No, if it has to be for 2 years, I will do it for 2 years. You know what I mean? But yeah, I do it for 750. My premium is 50, right? And for my YouTube, if you guys are interested, it will be the link in the description. All right, guys. But yeah, it kind of seems like I'm kind of caught up with the chat here. I don't know if you guys have any more questions. What's the $50? It's for the premium. It gets you access for the live trading and the alerts and more classes, of course. And what's the other one? The mentorship is $750 for the mentorship. That's when we do a one-on-one, like a literally one-on-one, hands-on. I will help you master trading to complete to like the perfection. Lifetime is $500, right? Lifetime is $500 for premium, but the mentorship includes lifetime, so it's kind of like a 2-in-1. Thank you, KT. Thank you, my man. Thank you. He doesn't use anything else, but the one, yeah, that one. That's the only one I use. I'm gonna quit my job and trade futures right now, bro. Where's the link for my premium group? It's in my YouTube. So if you are interested, of course, in checking it out, it'll be in my YouTube, right? It'll be right here. Wait, I put the wrong link. There it is. But yeah, if you guys don't have any more questions, I mean, I don't know, at what time do I do my mentorship? I do them usually at nighttime. After I finish trading, after I finish my classes and all that stuff, I do my mentorship with all my mentors, which they're right here, right? My mentors, all the people that I'm mentoring, they're all right here. So yeah. Let me see. What's the difference between I don't know. I do my like. I don't really want to promote too much. You know what I mean? I'm not trying to say it here. I don't want to sound like I'm self-promoting. Can you show the settings to the rest of the settings to the indicator? Just leave them default. The ones that I send, the pictures that I sent, is what you're supposed to change. The rest, leave it default. Wait, let me catch up with the chat. Can you show an example of a trade you took and explain why? Money Matrix. If you want to, of course, rewatch the video or the stream, you could. You always could. And I have more classes on that in my channel. So if you want to check that out, feel free to. How long does it usually take for you to find the perfect setup? I usually get them in like an hour into market open. So like around 10 a.m. EST. If I put $1,000 in my live account and I trade one contract, is that risking the full 1,000? No. There's a difference, right? You can trade one mini and one micro. One micro is $100. One mini is $1,000, right? So if you want to risk one contract, do one micro, which will be $100. So you'll say around 6. No, like around 9, maybe 11, around there. Yeah. I'm gonna quit my job and send you, bro. Okay, guys, don't quit your job. Be smart. Right? Don't quit your job until you're able to find trading to be very consistent to where it overdoes your job. If you need to drop the difference between both, I'll drop it. It's up to you, bro. It's up to you. I'm not gonna say anything because I don't want to self-promote myself, right? Will this video be reposted here? Yeah, it'll be on my YouTube. It'll be right here. Do you have an Instagram? Yeah, I do. It'll be this one right here. I'm gonna give you my business one, which is Blast Switch Trades. There it is. But yeah, that's my business Instagram. That has the link to my everything, my YouTube, and all that good stuff. Yeah. Wait, let me catch up with the chat. I just had deja vu, like big time. Oh my. Yo, I just had really okay. Whatever. How long does it? Okay, I read that. So if I have a funded account, what on ATF, what platform do I download now? Download Tradeovate. of course, if you bought the trade, there's two plans. There's the Rhythmic and Tradevate. If you bought Tradevate, search up Tradevate. If you bought Rhythmic, of course, search up Rhythmic. I've been staring at the chart for days, bro. Screen time, I promise you, it will pay out. It'll pay off. Trust me. Trust me. For me, I trade when I work late. Once I'm profitable and I have a consistent strategy, I'll leave my job. That's the whole goal. It's on how not to overtrade. Let me see. It's this simple. To not overtrade, it is this simple. That's it. It's that simple. It's common sense, you know what I mean? Just close the laptop. That's it. It's not hard. You know what I mean? I know it's a lot easier said than done, but guys, it's as simple as closing your laptop, staying busy, maybe watch a show. I know it's not so simple. I know it's not so simple. But real stuff, guys. Just stay busy. You know what I mean? It could be going to the gym, it could be driving around, it could be eating, it could be cooking, it could be whatever. Right? If you guys made your money, close the charts. It's not that hard. I know it's not that simple, but it's not that hard either. Right? Do I use Rhythmic? No. I use Tradevate on a Tradevate account. Yeah. If you use Rhythmic, you can only use the Rhythmic platform. Have you heard of the platform Think? Oh yeah, Thinkorswim is amazing. I love Thinkorswim. Yeah, I used to use it. But I used to use it when I used to do options. I work from home and I'm on my computer all day anyways, so closing the computer and walking away isn't an option. Okay, well, if you work from home, just stay busy by working. You know what I mean? Just close the charts, like close it out, right? And that's it. It's pretty much that simple. For your information, I'm trading with IBKR. To trade a mini, you need $12,000 in your account. To day trade more than 3 times a day, you need 25K. Okay, yeah, that's known as the PDT rule, right? It's PDT, right? PDT, yeah. With Tradevate, you only need $500 on your account, not 12,000, right? So yeah, with Tradevate, it's a lot more futures friendly. So yeah, with Tradevate, they allow you to trade with about $500 in your account. You can trade using a double counter practice. Yeah, you can. I'm a little tired, but yeah. And of course, I mean, if you guys want to learn more, feel free to add me. As you know, you guys can add me, and you can see more about it. Right? Much stuff got ahead. No problem, bro. No problem. Take it easy. Can Tradevate? No, Tradevate is not the same as MT4. Tradevate is for futures. MT4 is for forex. Are the commissions fees based on how many contracts you take? Yes, they are. How long did it take for you to become profitable? 2 years. 2 years of constant losing. And yes, I did use my own account. Yeah, I did. But here. Sabrina, I know you were asking about the mentorship here. Let me add everyone that was asking. How much did I lose? Okay, well, you guys know I'm pretty young. I'm 18. So I started trading when the day I turned 15 actually. So I literally had nothing to my name. I think I lost about $2,000. That's all I had to my name. And I lost it all. Wait, guys, who were the ones that were interested in okay, here, let me add you. Okay, there you go. Okay, bet accept. Sabrina, I know you were asking about it. Is ATF for Tradevate? Yeah, you could choose whatever you want to buy. I am also okay. Cool. Here, let me add you real quick. There you go. Me as well. Okay, bet. Let me add you. Bet. And what is Apex? Okay, clips. What you do is click on checkout, and then it's gonna ask you, do you have a coupon code? Use code Blastoise. Right here. Let me go ahead and take a picture of. Wait, what? Oh, okay. Maybe I got denied or something. Me too? Okay, cool. Let me add you here. Damn, bro. Your profile is white as hell, bro. Damn. Okay. The code for a funded account? Yeah, code Blastoise. It will give you 80% off. 80% off the accounts. So how do I connect my funded account to Tradevate? It automatically connects. When you buy the account through Apex, they will send you they will email you the username and password. Just got flashbang? Yeah, no, me too, bro. Like, damn. But here, let me go ahead and let me get this going. So it's okay. So I can get all the usernames. Okay, bet I got it. But yeah, guys, if you guys are interested in whatever the case may be, maybe you guys want to learn more or get access to the group or whatever, feel free to send me a DM. I'll send you guys the link and all that good stuff. How many trades do I take per day max? 2 trades max. Nothing more than that. Nothing more ever. But yeah. Sorry, I was using MT4 before, so what platform would I be on now? You'll be on Tradevate. Tradevate. Bro, don't be sorry, bro. Keep them coming. Keep them coming. Tradevate. I use Tradevate. So it'll be like this. Yeah. Thanks, I'll do research now. Yeah, I got you. I got you. Where should we DM me for the link? Just click on my name. Just click on just click on it like this, right? Click on my profile, and it will say like send message or whatever, like right here, and then you could just send me a message there. But yeah. Catch up with the chat. Damn, we've been live for an hour and a half, bro. You're about to have your box popping. Let me check if it's even going through. Okay, so there's one here. Okay. Okay, perfect, cool. But yeah, if you guys want to send me a DM, here I'm just gonna mass send it right now. Here. Let me get the link to this. Okay, and then here it is. Okay. Oh. What the hell? Wait. Hold on. Okay, there you go. Okay, I'm gonna go ahead and send it all over here. Here you go. Here you go. Here you go. Wait, let me see. Thanks for all the information. I'm a noob and I have some luck on Robinhood, and I want to take things more seriously. But explanation I've seen, it's a lot to learn, but I feel like I'm on the right path now, and I feel like I found out on your channel. Thanks for your patience with all the questions and explaining things for detail. Would you say a monthly subscription is the best? Here. Okay, there you go. Cool. Okay, let me catch up with the chat now. Any done? We're practically done. What subscription plan do I have for futures? For TradingView, I have the essential plan, the basic one. I'm late. Can I get the recording? Yeah, I got you. Here you go. Cool. Thank you. Okay, yeah. Okay. But yeah, I mean, if we're practically done with all the questions and all that stuff, guys, I'm gonna go ahead and call it a class for now. I might do another one this week. I'm not sure if it's tomorrow or whenever. Bro stays clapping. Bro, chill, my god, bro. Chill. But yeah, alright, guys, I'm gonna go ahead and call it a class for today. Once again, if you guys want more information on literally everything, feel free to DM me. I'll respond to every single DM. So DM me, and I got you guys. Alright, guys. But yeah, I'm gonna go ahead and call it a class for today. And yeah, thank you for the info. Of course, I got you guys. Of course, I got you guys. Alright, guys, take it easy, guys. Peace out, and I'll see you guys hopefully tomorrow. Alright, guys, take it easy. Peace out. Wait, let me see the chat. Let me see. How can I, bro? Mr. Hanger, bro. Alright, whatever. Alright, guys, take it easy, guys. Peace out. And for my YouTube, guys, if you guys want to go ahead and join the premium, and you guys like the trade recaps, the live trading, and all that good stuff, here, have this code right here. It'll be a discount to the premium, right? So here it is. Use code TRIAL. There you go. But yeah, alright, guys, I'm gonna go ahead and call it a class for today. For those watching the recording, feel free to like it, subscribe, and all that good stuff. And I'll